Hey, good afternoon, everybody. It's Mike with smartoptiontrading.com. It's Sunday, June 2nd. I'm doing a special State of the Markets video. For people who are my subscribers, I do these when I feel that it's important to do something. And for people who aren't, I'm going to put this out there a little later for you guys to see as well. I do this when I really feel the markets are in a bad spot or a good spot or something's going on that we should look at. So I thought today I'd like to look at some daily, weekly, and monthly charts side by side so we can start looking at some things. And the first thing I want to start off with is we're in a very event and news driven market. This market is gyrating mostly upon our president. Okay. So if you're not in the United States, it's pretty much gyrating on tweets and information from President Trump and China back and forth on the trade war. Now Mexico with Friday with entering into the trade war there as well. And you got to be leery of Trump starting in with the EU again now as this keeps going on. So, it's very tough to trade a market like that. So when we bring this up, we want to talk about, this is a time to reduce risk. So I don't want to spend a ton of time going over everything. And these are some short-term charts, right? So I have a daily 3-month chart up, a weekly 1-year chart, and a monthly 5-year chart up here. Again, on the daily, Fed day, reduce risk, right? That day. Cannot go over this enough. We made a new all-time high, closed on the dead lows, took out the 8-day. That was a bearish engulfing candle saying, wake up, okay? Something's not right with the market. That was back on the 1st of May, right? Then for the rest of the month, after a dead cat bounce, it's been down, 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 dead cat bounce, down, 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 and we closed on the dead lows on Friday. Again, who would want to be long this market? Okay, we talked about a possible head and shoulders top a couple weeks ago, that 280 being the neckline, and if we broke it, the implied move is from the neckline to the high, brings it down roughly 150 points to 265. So when you look at that, you say, okay, we can go down to 265. That would also line up with a 10% correction in the market. You look at a weekly chart, right? Looks like almost a double top, right? This is an ugly weekly candle. Came down, broke the ATR trailing stop on the weekly candle for the first time since we took it back here. Okay. Took it back after the December lows, right? High, down, down, down. You're in a support area, right? You do have some support around 275, 280. Lose that, there's not much until you get down further. The monthly chart's more concerning, right? The monthly chart shows a bearish engulfing candle. And when you look at this candle, we traded back above, made a new all-time high, engulfed the previous months and most of the last months before that. So I'm bringing this up not to try to worry you, but try to show you guys you need to be aware that right now the markets are not in a good way. And when you get candles like this, you need to take note of it. When you get weekly candles like this, you need to take note of it. When we've seen this in the past, we've seen follow through in those directions. So what we need to look for now is a reversal candle on the markets where they come in with volume, not light volume like we've seen on some of these reversal candles here, right? These days here, nothing special in the volume department. And see somebody come in and some call activity or some option flow. Okay. QQQs, not much different. Okay. You got this topping pattern up here, coming down here. Qs continue to come down and get weak on the weekly chart and the monthly. Again, the monthly was not a bearish engulfing candle. It was an outside candle. We had made a high, the all-time high in the Qs the month before. A little bit different, but an ugly, ugly candle that closed on the lows, right? So it was close, but not quite. The Qs have been one of the stronger indexes, right? IWM, which had been the leader out, has been struggling. The IWM hasn't even gotten back to all-time highs. It made a high of 173, right? This was back in January of last year. We can't get back there. There's no real solid bounce attempt in the IWM. And this candle, ugly, engulfed the whole entire range. Been weak, the weak link. Look at the daily chart. You had this first candle look like it was about to break out on these two candles, right? Looked like it was about to break out, broke out, gap down, took it all back. Everybody's like, yes, finally, the IWM is going to participate. Gap down the next day, and that's it. It's been lights out ever since. Weekly candle shows failure right there. Pull, closing on the lows. I'm pulling this up, guys, because I want you to see there's a lot of things to be worried about here. You need to evaluate what type of risk you want on right now. What's interesting is the VIX is not participating in this move. And what do I mean by that? On the daily chart, the first time we hit 280, the VIX put in a high of 2338. We blasted through 280 this week, and the VIX doesn't even get close to it. And you can see it's just lagging. And it has a tendency to do this sometimes. It'll lag these moves until it really wants to wake up. And what drives the VIX today more than anything else are programs. Programs, programs, programs. Guess what? During this sell-off, believe it or not, there hasn't been a lot of programs running. There's not a lot of sell programs coming in. There's no flushes, right? The moves down, you do get sudden flushes, but they're not on huge programs. You really have a bunch of algos running around here. You have a lot of pajama traders. You have the overnight markets very active right now. And for the most part, you're seeing what are quick sell programs, but they're not of size. They're not causing cascade effects. They're meant to really just play with the day traders. So there's a lot of that going on here. And that's one of the reasons why the VIX is just staying so muted here. So, sanguine, just not participating. So we have all this going on. And when we look at sentiment, it's telling us it's not there yet. This is breadth. We track the breadth here with people with me every day. And, when it was here, it was trending up, reconnected. That was your 3% pullback in March, took it back, reconnected, and took off. That's a trend. Since this area, it got choppy. Now maybe we're starting a downtrend, right? We're below the blue line, right? That's our point of contact, right? We're below that, and now we're starting a downtrend. So the question is, are we getting one of these? Or is it going to be one of these where we turn around and come back up? And in a news event-driven market, it's very tough to tell because one word this weekend could set everything off. We already have China saying they're holding U.S. responsible. They want to have talks, but they're holding us responsible for the breakdown. We have new tariffs on Mexico. So, one thing over the weekend could ignite this market or send it tumbling. We'll see how this works out. The oscillators just can't get to where we need them to be. We've stayed very bullish for the first half. Now we're staying very bearish, and we just can't get a good oversold signal. We just can't even get to the 200 mark. Never mind back here where we got this fabulous oversold signal at negative 300 back on December 24th. Okay, that's the NAMOT that tracks the NASDAQ, the NIMOT, the same one. Okay, negative 176. The SPY can't even get lower, just can't go. And then when we look at the put to call, oops, sorry guys. Then when we look at the put to call ratios, they're not there, right? We're getting these bounces, but there's a lot of very cheap out of the money calls constantly being bought on the indexes every day, and that's skewing things a little bit. The market's actually very bared up. If you look where the money's flowing, it's on the put side of things right now. But that said, we are in a decent situation for a sentiment squeeze if they want to. If we have a quiet night tonight and the China news that's come out is not perceived that badly, we may see a sentiment squeeze on Monday. I would watch for reversal. What's important now is you have to look at charts and say, what do I like or what do I don't? So let's start with the big one, Apple. And I don't want to spend too much time here. Apple, daily chart, hideous. Put in a high 215, fabulous earnings on this thing, right? Fabulous earnings, increased guidance by $2 billion, 75 billion buyback, and it's trading on China fear, and it's down all the way to 175. The weekly candle, there's nothing to like here, right? Coming into an area of support around 170, okay? 175 to 170, and the monthly candle shows the same thing, a reversal candle and a huge flush on this name. Google, okay? Ugly earnings. Not even, I wouldn't be looking at, this is one of the last names I'd be looking at for a bounce because earnings were ugly. Now we're hearing reports over the weekend that the Department of Justice and the SEC are combining to take a look at their activities. Facebook, this name, it's funny. You look at the daily chart, that was the earnings gap after good earnings, and it should have held and it didn't. Broke, came down, going lower. And everybody tries saying all the bad news is built in. Well, it keeps getting bad news and it can't get going. And you look at the weekly chart, obviously this was that real bad news, right? Flush, that was the news out of Britain. Can't think of the name right now. Here was your bottom, nice reversal on the weekly, nice move up, but it really can't get going. On the monthly candle, though, it doesn't look so bad. And this is what I'll point out. This is one name to keep an eye on. No China exposure. You look at this big month there, and it gave more than backing you'd like. It gave over half of it back, but it's still an inside candle. So the monthly on Facebook doesn't look as bad. Amazon, okay? Another name that's starting to hear rumors of antitrust stuff coming up. The daily candle, not good. Came down. We talked about when it lost the 50-day here. after spending multiple sessions holding the 50-day and bouncing off of it, finally capitulated. Now well below it, right? Couldn't even retest it once it finally broke it. Okay. Weekly chart going lower. Okay. Put high in, gap down a little bit, nothing there. No real good action here. It does have some support in this area if it wants it. And the monthly chart, it's a bearish engulfing candle on the monthly. See how far they want to take it. Netflix, everybody's been waiting for Netflix forever. This thing has been going sideways for 6 months. On the weekly chart, you can see it clearly, just going back and forth, back to the bottom of the range, which is just above 340. On the monthly chart, same thing. It's showing this thing is range bound for the last 1, 2, 3, 4 months. Okay, range bound, can't break out of this range. Again, no China exposure, worth watching. How about some strong charts? Well, let's go for a couple more. Let's go PG. We talked about PG a bunch. They were hiding in PG. You got to be careful here now. First off, this week last week you saw a new all-time high. You broke down from there, holding that uptrend, broke through it, broke the 50-day, and closed close to the lows on Friday. Weekly chart shows you taking out this upper range, right, after a huge run. Monthly chart shows a massive reversal candle taking place. So, that safe name looks like it may be coming out. McDonald's has been a name of safety. Okay, daily chart has been struggling with 200, cannot get through 200 and hold it, right? Every time it gets above there, it yanks back through it. There's been a battle here now for the last couple of weeks. Went ex-dividend the other day, held in pretty good. Weekly chart shows a doji, indecision candle. Time to take notice. Monthly chart still looks good, just a little extended. McDonald's a name to keep an eye on. Let's talk some other names. Let's talk chip makers. Let's just look at NVIDIA real quick for hell of it. NVIDIA is saying stay away. Okay? Horrible chart, keeps coming down. Here's your 52-week low, which I was surprised we didn't take out earlier this year. And now here it is coming down. Can we take this out? Monthly candle saying careful. If there's one chip maker, there's two chip makers that are of interest to me. One is XLNX. Okay? Daily candle trying to wake back up here, holding the 100 area slowly but surely. On the weekly candle, coming down, still holding in on 2 dojis in a row, trying to hold the 100 area. Monthly candle is ugly. You have a big reversal off of earnings and then a big down move, but not on the lows here. Again, if it can hold 100, it's in the game for a move back up. I still think this is one of the better names in the space. And then there's AMD. If you're looking for a name, AMD is the name to be looking at. Daily candle had that huge power move. It's been slowly giving it back as the market's been weak, but it's still holding that move. That's pretty remarkable. From last Monday, it held that all week long in this market, chopping along, going sideways. You look at it on a weekly chart, very tight range. This thing has been money off of 26. It's been struggling to hold 28.50. You notice it's struggling to close above it. Okay, we see that here on the daily chart as well. On the monthly chart, still looks fine. So, again, you're looking for strong charts. There's one. We could talk Roku. That daily chart, obviously, we know, huge move up here, looking fabulous as it comes in, digesting that move, made a high of 96 in the after hours. Weekly chart, you're getting a little bit here of an inside candle, right, off the highs, closed down a little bit, but very extended, has run from 25 in December, right, 23 and change all the way up to 96. Monthly chart still looks golden. Again, name is due for arrest at some point, so you got to be careful chasing this name at point. That said, this is one of the first names they go to. The difference was this Friday. Friday was one of the names they didn't pile into. Typically they do. One of the first names they went to. They didn't go into it on Friday. So what I'm trying to do, guys, is give you ideas of things to look at and a way of looking at the market here. And, right now, a lot of the names that usually lead us here are not there. The financials aren't there, right? The fins have been out of play since they put a high in over a year ago. We haven't even gotten close back to that all-time high. So it's time really just to be careful here and think about things carefully. So I'm going to do charts later, but I want to put this up there. But anyway, my name is Mike Pisani. I'm with Smart Option Trading. It's my company. If you're interested, I do real-time option flow every day. It's live on my private Twitter feed. I do a morning setups video every day. Come in. I talk about what I like for the day, either long or short or both, what I'm looking for based upon news, it's based upon earnings, it's based upon charts, based upon option flow from the previous day. Throughout the day, I call all that out, news, flow, trades that's going on, what we were looking at. I do a recap video every night for people who can't always be in front of their computer. You can hear what I was doing, what I think, and what I'm looking for moving forward, and what I like. And every week we do a weekly webinar where we teach. That's on Thursdays, usually at 6 p.m. Oh yeah, and I'm live 3 hours a day, so you can interact with me real time, see my screens, and hear my calling stuff out real time and ask questions 3 hours a day. It's $25 for the first month. Cancel anytime through PayPal. $100 thereafter, month thereafter that. I think is the best deal out there. Thanks for listening. I hope you're all doing well, enjoying your weekend, and I will catch all of you guys, my subscribers, on Monday morning. Good night.